Let's talk about the first thing called trend. Trend is derived from price movements. More green candles than red, especially if the green candles are longer than the red ones, you will see your OHLC going higher and higher and higher and higher. If there's more red candles than green, especially if the red candles are longer and faster than green candles, then you will see that OHLC goes down and down and down and down and down. If there are roughly equal numbers of red and green candles, all of them roughly equal in size and in length, then you will see that the price goes up and down, up and down, up and down, just basically going sideways, not going anywhere. The idea here is that once you look at a chart consisting of many, many candlesticks, could be a year, 200 plus candles, could be 6 months, could be 3 months, you will often be able to discern or to be able to see, identify a certain pattern or certain trend, to be exact. So when you have a group of OHLC, group of candles, you can tell trends. And trends have 3 types. Ladies and gentlemen, how many types of trends are there? Tell me in the chat. How many trends are there? Tell me in the chat. 3. No such thing as a no trend. It's always an uptrend, downtrend, and a sideways trend. Bullish, bearish, ranging, uptrend, downtrend, sideways. Simple as that. 3 trends. There are always going to be these 3 trends. To be specific, when it comes to an uptrend, you will always see price going higher and higher and higher. And then when you see price going higher and higher and higher, I know you can straight away use your gut feeling and say, hey, this is the uptrend because, you know, it goes up. But there is a certain definition that comes together with an uptrend, and that is called higher highs. Ladies and gentlemen, please write down in the chat, higher high. Write down in the chat, higher high. Higher high means what? You will see that the price every day go up and down one. Confirm there is volatility. It goes up, it goes down, it goes up, it goes down. It would not be green all the way. It will be green, red, green, red, green, red. But the greens are longer and higher than the reds. And because there is a combination of green and reds, you will sometimes see that the price goes up, then come back down, go up higher, then come back down, go up even higher, then come back down, go up higher, then even come back down. So you know that the higher the highs, which means the peak, it goes up, come back down, go up, come back down, basically from what we call mountain ranges like that. Go up higher, go up higher, go up higher, like that. It is never going to be green all the way. It's always going to be a combi of red and greens like that. So that's why you always see a higher high. Mountain peak higher and higher. There's always going to be a higher mountain next and next and next, after and after and after. That's called a higher high. And there is also the second part of an uptrend, which is called higher lows. Your lows, as it goes down like that, it can go down to this low, and then go down to another low, and go down to another low. A lot of people would combine higher high and higher low to tell me that this is an uptrend because of higher high and higher low. So ladies and gentlemen, write down in the chat, HL, higher high, higher low. HL. That's the definition of uptrends. Doesn't mean that the price goes up every day. No. It just means that when it goes up higher, it can come back down still, but it goes down lower. Sorry, it goes down lesser, higher lows. When it goes back up again, then it goes even higher than the before high, the previous high, the previous peak, whatever you call it. Higher high, higher low. Now, what is downtrend? The opposite. Downtrend is very simply lower, low. Write down in the chat, lower, low. Again, in a downtrend, you can also still have green and red combinations. You'll definitely not see red all the way. There's always going to be volatility. And when you see that price goes further down, it forms a low, goes back up, cannot go further higher up, go down, form another low, go back up again, form another low, go back up again. And when you line up these lows, it can see, hey, the lows are getting lower and lower. That's a downtrend. Simple as that. And of course, in the chat, please write down LL, LH. lower low, lower high. The highs are formed. You can see that the highs are here, here, and here. You can see that the highs are getting lower and lower. That, by definition, is called a downtrend. You see, why is it important for us to understand the definition of uptrend and downtrend? Because it is important for us to understand how is a ranging trend like. Because at the end of the day, ranging trend, sideways trend is the most confusing. Write down in the chat right now. Sideways is the most confusing. Sideways is confusing. Not just you feel that it is confusing. The entire market is confused. Don't know where to go. Should I go up? Should I go down? Sideways is always the most confusion. You will always hear people say, you know, that's downtrend. And another group, people say it's uptrend. It is confusing. By nature of a sideways, it means that the market don't know where it wants to go. So in that case, when it's a sideways trend, you will see that the definition of higher high, higher low, HHHL, and lower high, lower low is gone. Sometimes it is higher high, like this one here. Sometimes you can see that it's higher high, like this one here. Then it goes down to lower high again. Sometimes you see it is higher low, like this one here. Then it goes back down to lower lows again, lower lows again, then higher low again. So it is confusing when you don't have a straightforward higher high, higher low, lower high, lower low. Then that straight away you can conclude that this is a sideways market. Now you see why to define higher high, higher low, and lower low, lower high is important. Because when it comes to a ranging market, sideways market, you must be able to identify that this is a sideways market, and hence there might be a change in trend. Uptrend becomes sideways, sideways becomes a downtrend. Your ability to identify the change in trend is what allows you to get out of distribution phases. Your ability to identify change in trends is what allows you to get in at the low price. Therefore, if you are a good trader, you would always be able to tell higher high, higher low, lower high, lower low. That's it. That's trend.